Good morning, Monday. Back to personal finance, 2 weeks in to remote learning, and we're moving along fine. We're getting things done, and this week we're going to put a full week in this week, and then I think we get 2 weeks for our Easter break, and then we'll reconvene and take it from there. So, very interesting personal finance in light of everything that's going on in the world. Obviously, a tremendous health issue, health and safety issue out there, but almost right behind it, and you hear the president talk about it, and it's one of the main topics on news shows, is the economic implications of what's going on. So, and the personal finance aspect, and all you hear about is the stock market going up, the stock market going down, and that's really what, really where we are right now in personal finance. So, this was Q&A. This was Q&A 327. Okay, which I'm hoping we can all submit today sometime on Monday. Q&A 327. We started this on Friday. Little cough, nothing too worrisome. These were the first three questions. One, asset, and reviewing some early submissions, but in terms of what we wrote down, an asset is really is it's a value of cash or cash equivalents. It's something of value, right? It's something of value. And something of value could be cash, because that allows you to buy things, or cash equivalents. That's a phrase. That's something equivalents. Let's see if I can get that in. Asset, value, cash, and cash equivalents. Asset, not only cash, but things that can easily be converted to cash or be converted to cash would be considered an asset. So anything of value. Home, car, right? Stocks, bonds, things that we might own that could be sold and converted to cash would be considered an asset. Within that category, there's some things that are more liquid. That's a phrase that's used, liquid. Some assets are more liquid than others. And the liquidity has to do with the ease in which an asset can be converted to cash. For example, a car is reasonably liquid. It might take a few days, a week, maybe sooner to sell a car. To sell a share of stock would take a minute. To sell a home would take quite a while. There's quite a procedure to go through, not only the whole process of selling, but there's legal ramifications and formalities that have to be done in order to sell the home. So a house is not as liquid as a car. A car is not as liquid as a stock. Cash is the liquid asset. Liquidity refers to the ability to turn it into cash. Liability, something that's owed. It's an obligation that you have where you owe something to someone else, a liability. Something owed. Dividends. Dividends are a share of the profits of a corporation. We're going to watch a little video today on dividends and dividend income. Okay, so when you buy into the a share of ownership in a company, you buy a share of stock. One of the possibilities is of buying that stock is that you are going to get a share of the profits. That's what dividends are, a share of the profits. And that's one of the possibilities. Again, today's video, we're going to focus a little bit more on dividends and what are some things that happen when you buy stock. What are some of the things you do when you invest? Now, when we talk about investing, a lot of times we're thinking in terms of securities, stocks or bonds. Many times we're thinking in terms of securities, stocks, and bonds, but you can invest in many other things Um, the one I like to talk about in here is real estate, because that makes kind of makes sense when you're talking about real estate. That's something that's a little more tangible for those of us uh, that are not as well versed in stocks and bonds. But we'll talk about that more. Uh, there was a number of different kinds of ways to invest, kind of strategies. One was value investing. Value investing. One of the great value investors of all time, Warren Buffett, okay, espouses value investing. And what you're doing with value investing is and I'm looking to some extent at some of the early responses from you guys. You're looking for an undervalued asset. Undervalued asset. That doesn't necessarily mean something that's uh, 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 poor asset, something that's cheap or less expensive, but value investing. And maybe I can use real estate uh, as opposed to stocks when we talk about value investing. Um, Value invest. You're looking for a good value. It's that simple. You may look on your street and you may see a home that it looks like to you would normally sell for $300,000, and normally sell for 300,000, and the person is selling it for 250. Well, if you know your real estate and you know that the value is 300,000, but they're selling it for 250, that would be a wise purchase in terms of value investing, because you see value there. Now that doesn't mean it has to be. Maybe there's a really big house, that you see somewhere, a tremendous home, and it's selling for $750,000. But if you know your investment and you know this market, and you say to yourself, "Well, wait a minute, 750,000." That home's, that home is selling for 900,000, let's say, and you think the value is only 750. You wouldn't touch that. So the same is true with any other kind of investment that you might make. The idea of looking at the value of the investment, strictly looking at the value of the investment, and saying to yourself, uh, based on the price and then based on the value, I think it makes sense to invest in that type of product. It could be a house, it could be stock, it could be bond, or others. Income investing was another one. Income investing. That's where you buy to generate yourself some income. Income investing was on our Q&A. And that would use in real estate as the example. Well, how does that work? Well, when you buy the house and you go ahead and live in it, that's not really buying it for income. But let's say you buy a property that's, and I've spoken to at least 2 students in the class about this, about buying rental property. So you buy a piece of property and it costs you $500,000, right? But you say to yourself, well, the property costs $500,000, but it's a 2-family house, and I can get $2,000 a month out of each dwelling. Okay, you're going to be able to generate some income for yourself. Now, when you're talking about buying a house or buying a apartment complex and renting out, there is a management component to it, but there you're buying it and you're looking to generate income for your investment. Okay, the same could be true with stocks. You buy a share of stock in a corporation, and you could be buying it knowing that they declare a dividend, that they're going to declare a dividend every 3 months or twice a year. And when you buy stock and they declare a dividend, you're buying it so that you have income from your investment. So it's just what it sounds like, generating income. Now, some of these phrases are used, and they're interchangeable. Growth investing, okay, you focus on the value increasing over time. Value investing, I guess you could say, I mean, they kind of go together, and I think anybody would tell you that growth and value investing go hand in hand. But I guess if you wanted to narrow it down, growth investing focuses on the value increasing, okay, over time. Now, value investing, we said, is when you look at an investment and you say to yourself, well, that's a good value. That house is selling for $250,000, but I know it's worth $300,000. So right away, you're getting involved, you're making an investment, and you know right away that you have increased value there because the selling price was less than what you think it's valued for. Growth might be a situation, to use the similar example, where you buy the house for $300,000, and maybe you're saying to yourself, well, you know what, I'm going to sit tight, and I know that I bought this house. It's fairly priced, but over time, over the period of time, the price is going to go up. So if I hang on to this house in this neighborhood, in this area, geographic area, I think if I hang on to this house, in 5 years, this house is going to be worth $350,000. Or in 10 years, this house is going to be worth $400,000. So that's where your growth investment comes in. Okay, growth investments can pertain to stocks as well. You buy a share of stock, and you buy it, and you buy it at a certain price, and you've invested a total of $10,000, and you say to yourself, well, I'm not worried about dividends. I would like to see the value grow over time, and then maybe sometime down the road I'll have this asset that's worth significantly more than what I paid for, and that would be a growth investment. Now, this is one that I put in because I've seen the phrase plenty of time, buy and hold. Very similar, buy and hold. Very similar. It's a long-term perspective. Sort of like you're going to buy something and you're almost going to forget about it. Not pay attention to price fluctuations. You buy the house and you don't worry whether the real estate market's going up or down. You don't worry about whether the stock market's going up or going down. And we can almost, at the beginning of the course, we were talking about the stock market a little bit, and you can see what's happened in the last several weeks, last month. And that's where we're going to focus on more in the next few days. And there was another one that I think we listed, dividend investing. And this is really akin to income. And I think that was the last question that I asked about. What are some of the similarities among these different styles of investing? And dividend investing is where you're looking for the dividend every 3 months, and that's where the company sends you a little piece of the profit based on how much stock you own and what kind of percentage. We'll talk a little bit more about that and use some more specific terminology. So these were just the ones that we had on Q&A 327, types of investing, and that kind of gives you a sense of it's more than just buy low, sell high. Sometimes it's more than just buying something hoping to get a steady stream of income. Sometimes it's both. Sometimes it's a mix. Sometimes it's a slight variation of those. Okay, so today we're going to pursue it a little bit further with our Q&A 330. Q&A 330, we're going to talk a little bit more about investing and stock prices, and that's posted up there for you. And I think what I did today was I typed it up like the old days, and I posted a picture of it. I don't know if that's easier for you folks from your end. The same doesn't make a difference, but I'm asking that question, and today you can kind of give me some feedback on the stream about that when I pose that question. Okay? So thanks for listening. That's our review, and good luck on our Q&A, and we'll keep moving forward. Hope all is well.